Welcome back. The Middle East has become a hub for private credit as global economic conditions hit funding opportunities for both founders and investors. I had the chance to speak with Andrew Kahn, the CEO and co-founder of Partners for Growth. It's a private credit shop that is zooming in on the Middle East. The firm was an original backer of Saudi Arabia's buy now, pay later unicorn Tabby and is actively scouting more deals across the region, with investors and founders across the GCC turning to growth debt as an alternative to equity. I asked Andrew about the trend and where PFG fits in.
PFG is a private credit firm, so we make loans to technology and innovation companies globally. We're based in the San Francisco Bay Area, but what makes us a bit unique, given our size, because we're relatively small, is that about 2/3 of our loans are outside the United States, in areas where there are substantial, or a lot of equity support, a lot of venture capital support, a lot of great entrepreneurship, entrepreneur hubs globally, but where there's a dearth of debt capital. And that's what we do. We step in and we provide debt capital to these growing companies.
So walk me through the debt capital opportunity here in the Middle East and what brings you to our part of the world.
Yeah, so maybe to step back, if you think about a company's life cycle, it starts with permanent capital, so raising equity, venture capital, private equity, and whether it's the U.S. or outside the U.S., there's actually relatively plenty of that globally. And then you have commercial banks on the other, and so when companies start to have revenues and they're growing and they look for debt financing to take them to the next level, they're looking at commercial lending. But commercial banks are very conservative. They're looking for companies with history of earnings and cash flow. And so a lot of these companies that are growing, that are spending ahead of revenues but have great business models, don't have that kind of debt financing available from commercial banks. And that's where we focus and we fit in. We provide that growth capital where their only alternative is to sell more stock and incur dilution. And of course, that's not good for the owners. It's not good for the employees. And so they're looking to get debt financing to the next level. And we really like underserved areas globally where, again, there's great equity support, like in the Middle East, but not a lot of debt financing. And so that brought us to this region about 6 or 7 years ago. And since then, we've provided about 15 financings to 15 companies and over $300 million worth of loans, primarily to technology and fintech companies, both in KSA and in UAE and the broader GCC.
And what can you tell me about deal flow right now? Can you give me an example of a deal you've signed in the last 12 to 18 months?
Sure. I mean, this is one of the most exciting areas I've seen. I mean, I started my career right after the stock market crash in '87 and been through a lot of cycles. And this is one of the more exciting global centers for technology innovation. There's durable macroeconomic trends and demographic trends that are supporting that. The Vision 2030 is supporting that. And there's great entrepreneurship, great private equity and venture capital, but again, not a lot of debt financing. So we came here about 5 years ago, saw the opportunity. Give you an example, company that most people probably would recognize is Tabby, right? Tabby's one of the most successful fintech companies in the region. They started in UAE. They're now in Saudi, headquartered in Saudi. We started getting involved with them before their Series A, before they raised equity, institutional equity. And this is a company that is allowing consumers to pay for goods at point of sale through installment payments. And they needed money. They needed a lot of capital to finance their business. And they were too young to go to a bank and get financing for that kind of business. And we provided them with at the time, we scaled up 10, 15, 20, $50 million. And we grew with them until they got to the point where they were able to attract the international credit providers who gave them hundreds of millions of dollars.
And at a more macro level, what would you say is the outlook for private credit in the Middle East? As I said, there's a lot of interest in this space. Are we just getting started?
I think so. I mean, we've done, as I mentioned, 15 transactions, over $300 million worth of loans. Our backlog, our pipeline is very strong. I'm more excited about this region than I've been in a long time with any area within the world that we've loaned to. And we've been doing this for 30 years. And it just has to do with government support of innovation here, has to do with the technology that's being developed, the entrepreneurship, regulation is very positive, and so we think that there's a real tailwind for us to do deals here. But again, a real dearth of debt financing. Lots of equity. You'll find all the big equity players are coming in here, right? But just not a lot of debt financing.